Profit and loss statements can be overwhelming.
Sure.
What do you do with all that information? How do you disseminate it?
So for most companies, there's two different things. I'll talk about one now, and then we'll get to one in here in a minute. One of the things for almost universally is for people to understand that not every piece of information on there is something you have to pay attention to every single month. There's generally, for most businesses, by the time you weed things down to things you can't control, like your B&O tax and your rent that you negotiated 3 years ago, and you had 2 more years on your lease, and employment taxes and permits if you have permits. Like there's these things that you either pay them or you go out of business. Okay, so the number of minutes I should spend on that every year, looking at that on my P&L, is pretty close to like 5 or less, right? There's generally 6 to 8 key accounting areas to pay attention to. For service industries, they're almost always indirect or cost of goods sold. And they're things like labor, materials, job supplies maybe, sometimes office supplies, depending on your business. Like you're going to have these handful of things that really drive the business. Kind of like the KPIs. There's these handful of things that really tell you the business is going well or not. The most important number on the entire profit and loss statement in my mind is the gross margin. So if you don't know what a gross margin is, the gross margin is not gross profit. So you have your direct costs, your cost of goods sold, and then you had overhead expenses. The gross margin is the percentage of money that's left after your cost of goods sold or direct. So for most businesses, you're going to spend somewhere between, let's say 40 to 60% on direct expenses, labor, job materials, job supplies, permits, all that kind of stuff. Generally speaking, you want to have 40 to 60% left afterwards. So if you're below 40%, we're probably getting in an area that's might be a little scary. If you're above 60%, you maybe aren't paying your employees as much as you should be. So the gross margin, that percent number, for me is one of the most important numbers. That would be one of the key numbers to look at. Labor percentage, job materials again. There's these handful of things that tell you things are going well or things are not going well. So you might run a profit and loss statement and have literally 65 different line items of expenses. You can remove 57 of those probably and have a really good handle on what's going on if you know which ones to focus on. So for people who are overwhelmed by this stuff, understand the first thing we're going to do is weed out all the things not to pay attention to.